Hello everyone and welcome back to the channel, and I hope you guys are doing great. So in my today's video, I'm going to discuss with you about a company called Rajoo Engineers Ltd. We're going to discuss their Q1 FY27 results and see their numbers and see what are the things that have impacted them in a negative or a positive way in their results, and how things are progressing for them, and what is my and view on it. So let's get into it, right? But before I get into that, I'll just tell you in brief what do they do, right? So they manufacture this plastic, extrusion machinery. So over here, what they do, right? So there are a lot of companies, right? If you they need to manufacture plastic equipments for packaging various stuffs and everything, right? You might see from milk to bottles to the sometimes the parcel juice that we take and all those things, and various other products, right? So what the this company does, right? They manufacture those machineries and sell it to them. So whatever might be the requirement of certain companies where they require these machineries, in order to make those plastic stuffs, right? So they come and give the orders to Rajoo Engineers, and according to their requirement, they manufacture these machinery and sell it to them. So that's their main plain business model, right? And the good thing about if you look at the business model, right, and if you look at the screen, right, so they're not how to say, their machinery is not just for one specific industry. So they are diversified, and they manufacture various kinds of machinery. If you look over here, they manufacture mono and multi-layer brown films. They mono and multi-layer sheet lines, thermoforming and PS form vacuum forming machines, mono and multi-layer extrusion, casting and lamination. They are into also a PVC segment where they manufacture machineries for them, which can be used over there, and cross lamination film line. And obviously, you guys can go and just, if you can just type this thing, you can see which are the various kinds of product for these machineries are used for. So that is their main business model. So they are like into engineering, where they manufacture these machineries as per the requirements of the company, and then they sell it to them. And at the back of it, they receive one-time payment. At the same time, if they have agreement, of maintenance, yearly maintenance, everything, that is the recurring revenue part of it. So if let's look at their recent results and how well they have done, right? So if you look at their income from operation, right, they did quite well. It grew by almost 44.66% from 85 crores last year to 123 crores. So in terms of the growth, in terms of revenue, they did quite well. But unfortunately, now that didn't. They did not get the operating leverage or similar amount of growth also, because if you look at their profit after tax, it grew by almost 15 point. It almost go only by 15.52%. Last year they made a profit of around 15 crores. This year they made a profit of around 17 crores. And the same, and if you look at it, one of the main reasons that the management said, right, because of whatever the geopolitical issues are happening, there has been increase in the raw material prices, the procurement costs have gone up, and how to say, this the logistical costs also have gone up, which has overall impacted. And we can clearly see it over here, right? The EBITDA margin has come down from 21.84% to 17.65%. PAT margin is also has come down from 17.65% to 14.1%. So that had clearly affected in a negative way. So in short, if I see these results, right, so yes, there is a demand and they are fulfilling the demand and the revenue is increasing. But at the back of it, these increase in costs has impacted them in a negative way. So I think over here, if they were able to pass this cost as soon as possible, this would have helped them. But let's see how they handle this in future. If the this kind of price increases sustains, then will they be able to pass it on slowly over the time, so that they're able to get that operating leverage back and improve the overall profitability. So this is just for the quarter one what has happened, right? Because I'm going to just show to you in the screen how things are progressing for them on the profitability matter, metrics, right, from ROE to ROA to ROCE, right? So if you look at the ROE, right, last year also it came down from 23.3% to 14.3%. ROA also came down from 11.7% to 7.3%, and return on capital employed also came down from 32.5% to 23%. So 20.3%, sorry. So even if we see over here, right, yes, in Q1 they did had a challenge because of increasing raw material prices, logistical costs, procurement costs, right? But things were not that great in the last year also. Because if we look at their results, right? So compared to FY24 and FY25, FY26, the sales growth came down and the capacity utilization came down, which impacted. And capacity utilization for any, how to say, manufacturing industry is a big thing, right? Because we need to understand, for any manufacturing industry, they have their whole factory, they have their whole machinery, and they're the workers which are and employees working over there. No matter whether the factory is kept utilize 10%, 15%, and 100%, the fixed cost remains the same. The electricity, the employees, the worker, they remain the same, right? So whenever the capacity utilization comes down because of the demand coming down, right, it impacts in a very how to say, very brutally. And that's what happened with Raju Engineers. So now over here, if we look at quarter one, the only, I would say the best thing is, right, that the demand is coming back. That's why they were able to, increase their revenue by 44%. The capacity utilization is improving, the demand is improving, right? But at the same time, they're still not able to, how to say, improve their overall profitability metrics because of the things out of their hand, which is like increasing raw material prices, procurement costs and logistics costs. So if the demand continues, and the only thing for them to make the profit back is obviously they should be able to pass this cost on to their customers and obviously communicate with them if the high prices still continue, or they hope for that things settle down and the prices come back to normal. That is one thing. And obviously overall they have to have a control on cost. So that is the only thing, right? In terms of sales, they're doing well. The only thing is they need to work on their improving their EBITDA and PAT margin, because one need to understand, no matter how much good is the sales growth for a company, right? If the profitability margin is not improving, the stock is not going to make any money for the shareholders. Very, very rarely. You can go and check the history, or you can go and check Screener and check various companies, right? When sales growth comes with the operating leverage, that's when it helps the company in a very good manner. Sales growth is there, but if the profitability is not improving, then it could be a problem. And over here, okay, we have seen the quarter one. Now we have to see in quarter two whether the EBITDA margin and the profit margin is improving or not. So if that happens, this clearly shows that the things things are coming back to normal, or they are able to pass the extra cost to their final customer. So in short, in terms of revenue for Raju Engineers, it's quite great. In terms of profitability, yes, there is pressure, and if they're able to work that out and come out of it, it's going to be a really good sign in the coming quarters. And if you guys like this video, please do hit like and subscribe to my channel. Thank you and God bless.